Hey, guys, Yassine here. It's been a while since I've put out a video, but I have an urgent message I want to share with you, which is why I have Keith and Shannon here with me. Keith and Shannon, say hi.
Hey guys, how's everybody doing?
Yep. So, there's been a lot of talk in the marketplace recently about a correction or a crash in the near future. Since the flash crash in the stock market on February 5th happened, a lot of people have been freaking out. Is this going to be a cascade effect? What's going to happen to the real estate market? Is it going to follow the stock market? Are we entering a correction here? Is it time for a downturn? Which is why I've decided to do a three-part interview series with Keith and Shannon, where we're going to explore two main questions. Is there really a crash coming? How can we know? And what are the signs? And if there was a crash to take place, what are the different strategies we can put in place to immune ourselves and, most importantly, profit from an upcoming crash? So these will be the main questions we'll be exploring in this interview series. However, I'm not a financial, so here's the disclaimer. Neither myself or Shannon or Keith, we're not financial analysts. We're not financial advisors. We're not economists, right? So everything that's being said in this interview is our personal opinion and is strictly educational, right? You should seek your own financial advice. And, at the end of the day, we're investors, just like you. We watch trends, we analyze the market, and we make educated decisions based on risk and reward. You don't have to be a genius to spot trends and patterns. Now, I do not claim to know if or when a crash might happen, but I think, or I'd like to think, I'm intelligent enough to prepare myself. So this is my personal opinion based on studying the market and seeing signs in the marketplace. So with that said, the biggest question that we want to first explore in this part of this interview is there a crash happening? How can we be for sure? And what are the signs if there's a crash happening? So if you trade in the stock market, or, you keep an eye on the stock market, or you're close to it, you've probably have seen or witnessed that the Dow Jones losing around 2,200 points since January 26, which is closing in on a 10% decline in a single trading day. Guys, that's the biggest intraday loss in history of trading. There hasn't been a time in the history of trading where the Dow Jones lost around 2,200 points in a single day. A lot of economists, a lot of analysts are comparing it to the crash in the 80s. So that's one of the signs, I think, that there might be a crash coming, or at least a correction happening. The other signs that I've been looking at is real estate as a cycle, right? As you know, real estate as a cycle, there's bullish and there's bearish, right? And since 2008, the market has been on a 7-year recovery period, which historically, when you compare it historically, that's a very long recovery period. So it gets you wondering, is there an end date, right? The market keeps going up. Is there an end date? Will there be a downturn taking place? And while I was reading, I came across an article on REIT.com where the author basically said that as of September 2017, that date marked 8.5 years since the beginning of the current real estate cyclical bull market. So a lot of writers, along with the Nobel Prize winner Robert Shiller, has expressed concern that the broad stock market has now become overvalued. And the author of the article himself also expressed concerns that even the private side of the real estate market have ventured into the same territory. So let me share my quick screen here. I just want to show you an analysis article by The Economist right here, where it shows the prices in real terms since the 80s. And as you can see, right here, this is San Francisco, this is New York, and this is the United States in general. You can see the ups and downs of a real estate market. And if you can notice here, Keith and Chen, can you see my screen?
Yeah, clearly.
Yeah. Can you see where it tops in 2006, 2008, and bam, the market crashes. And it bottomed.
Very memorable.
Yeah. So we'll get into that, by the way, guys. I have, unfortunately, victims of the 2008 crash, and which is why I have Keith and Shannon here, to share with you, how they were able to immune themselves against a crash later on after they had tasted the pain. But let me take a step back here. So you can see that the market bottomed at, around Q1 2012, Q3 2011. And it's been on a rise since then. And as you can see, we're closing at all-time near high in terms of prices. And you're probably feeling this increase if you're in Ohio, if you're in California, if you're in Seattle. The prices are just ridiculous, right? So this is one sign that you gotta keep a very close eye on. Another sign is the stock market. As you know, every 5 to 7 years, there's a correction in the market. Maybe not a crash, but a correction, 10+% correction. So this is the Dow Jones over a 100-year historical chart of the Dow Jones. And this is as of February 26. And as you can see, you're seeing here the up and down. So here is in the 1929, where the top of the market, then the market crashed, and then it bottomed in July 1932. Then it went up, then it went down, then it went up, then it went down, right? And this takes us all the way to 2008, 2006, where the market topped and then it crashed, right? And it bottomed in 2011 over here, 2009, and it started to climb up. And as you can see, we've been on a climb ever since, and we may just be at the turnaround right around the corner. So all of this is just to say that as a real estate investor, you have to be, not looking just at, marketing and VAs and postcards, but you got to take a step back and look at the market as a macro. At least that's what the wealthy real estate investors do. They take a step back, they look at the market as a trend on a macro level so they can position themselves to take advantage of the opportunities, whether it's upside or downside. And as you guys know, if you've been in the real estate market, if you're like over 20 years old, you've probably, you're aware of like the effects that the 2008 crash had on the economy, had on the wages, had on the business. It was devastating. And I think Keith and Shannon here were one of the victims of the 2008 crash. So could you tell us guys a little bit about your background and, what was your experience during the 2008 crash?
Well, like I said earlier, Yassine, that was a very memorable time for us. And one of the ways I like to explain it is when you get into a venture like real estate investing, a lot of people only look at the probability of a positive outcome. The probability of a positive outcome, they don't estimate the probability of any negative effects.
And that's entrepreneurs naturally, right? Because we're optimistic people. So we're even overly optimistic than anyone else.
We're trained to see the potential.
Yeah.
We're trained to see the potential positive, but we have to discipline ourselves to also consider the potential negative.
And so hindsight's 20/20, but one thing that we have learned from having been through some mistakes in a crash like that is there are unpredictable random variables that you must put into your probability calculator and go, okay, if the worst case scenario happens, like a crash, like a stock market crash, a housing crash, and simultaneous in particular, what can I survive that? And am I set up properly strategically with the strategies I'm doing in real estate to handle the worst case scenario? And better yet, have I aligned myself to take advantage of anything that lies ahead? So
what is that worst case scenario, Keith, that could happen? Maybe that's one of your experiences.
It's what we went through. So imagine when you have, you hear about all the strategies where you don't need to put your money into it, but you need to put other people's money into it.
Mm-hmm.
And there's things like private money and hard money. That's money sources that will give you money to go buy real estate with. And when you start focusing on any type of particular strategy, lead source, there are people that will allow you to take over their deed, will sell you their house for half price. Well, you're using other people's money generally to accomplish that.
Right.
So like a worst case scenario.
Yeah, fund your fix and flips and stuff like that.
Yeah. No, basically, right before the market crashed, we had a portfolio of somewhere between 30 and 40 properties.
Wow.
And we were in the middle of renovations. We, just to give you an idea, if I'm remembering the numbers right, between a 3 to 6 month renovation, we saw we had 3 houses in one particular neighborhood that felt like from the start of the renovation to when we finished it, lost half its value.
Oh my God.
And so we had all of these rental portfolios that were leveraged with short-term money, private money. There might have been a couple of subject twos in there. Basically, we guaranteed the payments.
Wow.
And so we were in a huge mess. The people who were backing us were in a huge mess.
Yeah.
And so we had to come up with a solution so that we could survive. And fortunately, we did recover fast and fast enough to help because, the decline took a couple of years.
Yeah, I mean, I know friends, I'm sorry to hear that. I personally know friends who, lost their fortune in real estate. They were heavily invested in real estate. If you remember at that time, properties kept going up. And I mean, you can get a mortgage like this, right? Like your neighbor is a mortgage broker, your aunt is a mortgage broker. Anyone can get that mortgage at that time. You didn't need the credit check, employment history. All of that didn't matter. And you could get money like this. Money was for free money, right? Free money all over. And I had friends, unfortunately, who were over leveraged and honestly lost their shirt. So much so that they sold all their properties at a loss. They filed for bankruptcy, credit score in the toilet. They had to downgrade to a mobile house, move their skills. Yeah, it's just like, lives were wrecked. Now, thank God, I wasn't too involved. Like, you will talk about the strategies, but I wasn't too much involved on the investing. I was, I was just getting started in real estate, so I wasn't even that invested in the real estate. I was just starting to learn about it from friends and stuff. But I've seen the ones who were teaching me how to invest in real estate were like gurus take the hit.
Yes.
So, which is unfortunate. So, I mean, we know that at some point in the near future, right, with all of these signs that we just went over, a crash is almost inevitable. It's certain. It's the pure economics. It's pure market trends. If you've been in the market for any period of time, right, just simply looking at the chart, the historic chart over the past, 20, 50, 100 years, and you can spot patterns. What goes up, goes down, right? Mm-hmm. So then the question that you need to ask yourself is, are you and your family exposed to a crash? Do you have a strategy in place to immune yourself from a crash? And even more importantly, do you have a plan to profit from a crash? Because if you guys keep an eye out, that wealth is made during crisis. The greatest wealth transfer in history happens during downtimes. You have hedge funds, you have investors just sitting on the sidelines, savvy investors sitting on the sidelines with deep pockets of cash, just waiting for a correction or a crash to happen to jump in and take advantage of that. And as you may have heard, money is made when there's blood in the street. It's unfortunate, it's sad, it's true. And, as investors, we know this very well. We only make money when there's a problem, when a seller is having a problem, whether there's a divorce, there's a foreclosure. Us as investors, we make money when there's a problem. If a seller doesn't have a problem, we don't make money, right? Now, if you take that as a macro level, as an investor,
Right.
you can make money from market changes as well. So anything to add to that, Keith and Shannon?
No, you hit it on the head. And I think the important thing is to just know what strategy is going to have the highest probability of a positive outcome in a bad situation. And how can you also help the majority of the people that have fallen victim to the unfortunate circumstances of the economy? And if you have those two aligned, you can not only help yourself tremendously, but you can help a lot of other people because you're geared up and ready and you know how.
Well, and then just, I'll be honest with you, ever since that happened to us, it changed our life forever. How we do business, we are always evaluating the risk. And we're always choosing the least risk because it is just maybe not as sexy sounding as some of, the glamorous, big things, but you know what? Those big paydays or big giant, just amazing stories comes with a lot more risk. And so going through that really tested our, and really helped clarify what risk level we were comfortable with.
Absolutely. And that's, so we can all agree and we can all see that there are alarming signs of a possible crash or even a steep correction that could take place in the near future. So then the question is, what are the different strategies that you can put in place to immune yourself and your family, from a crash? And even more importantly, how can you profit from an upcoming crash or correction? So that's what we're going to cover on part 2 of the series. So stay tuned and watch out for the next video in the series.